Hello everyone and welcome back to my channel. You are watching The Wealthy Brains and now let's get in this video. John Wyckoff has spent over 25 years involved with the stock, financial and commodity markets. He was a financial journalist with the FWN Newswire service for many years, including stints as a reporter on the rough and tumble commodity futures trading floors in Chicago and New York. As a journalist, he has covered every futures market traded in the US at one time or another. Jim is the proprietor of the Jim Wyckoff on the Markets analytical, educational, and trading advisory service. Jim also worked as a technical analyst for Dow Jones Newswires and as a senior market analyst with TraderPlanet.com. Jim is also a consultant with the highly respected Pro Farmer Agricultural Advisory Service. Jim was also the head equities analyst at CapitalistEdge.com. He received his degree from Iowa State University in Ames, Iowa, where he studied journalism and economics. Wyckoff said, "We're past that point in gold and we're close to that in the crude oil market. This bust cycle in the raw commodity sector is probably going to turn this year, and you're going to see the boom cycle come into play, and you'll see higher prices." Gold and silver prices are moderately down in early U.S. trading on routine downside corrections following recent gains and amid ongoing price uptrends. Both markets remain firmly bullish from a charts perspective. January gold futures were last down $8.70 an ounce at $1,784.80. March COMEX silver prices were last down at 257 cents at $325 an ounce. Global stock markets were mostly lower in overnight trading. The U.S. stock indexes are pointed toward lower openings when the New York day session begins. Global equities markets are seeing corrective pullbacks and profit taking from the shorter-term futures traders, following recent solid gains. There were also some downbeat economic projections released from the OECD think tank and the European Commission. The OECD said global unemployment in 2020 was the highest since the Great Depression of the 1930s. The EC said the Eurozone economy will shrink by 8.3% this year, which is a greater decline than its earlier forecast of minus 7.4%. The important outside markets today see NYMEX crude oil prices lower and trading around $40 a barrel. The US dollar index is higher early today. The yield on the benchmark US Treasury 10-year note is currently around the 0.67% level. US economic data due for release includes the weekly Goldman Sachs and Johnson Redbook retail sales reports and the IBD TIPP Economic Optimism Index. Several Federal Reserve officials are slated to give speeches today. Technically, the gold bulls have the solid overall near-term technical advantage. Bulls' next upside price objective is to produce a close in February futures above solid resistance at this week's high of $1,807.50. Bears' next near-term downside price objective is pushing futures prices below and solid technical support at $1,754. March 2021. Silver futures bulls have the solid overall near-term technical advantage. Silver bulls' next upside price objective is closing prices above solid technical resistance at the February high of $19.125 an ounce. The next downside price breakout objective for the bears is closing prices below solid support at the April low of $17.175. First resistance is seen at the overnight high of $18.68 and then at last week's high of $18.85. March gold GCM 21 0.37% was up $6.30 or 0.3% to settle at $1,837.60 an ounce after the most active contract logged a 3.6% weekly gain. Prices extended a climb to the highest finish since February of 10th, FactSet data show. April silver SIN 21 1.42% also tacked on 2 cents or 0.05% to $27.49 an ounce. The near-term technical postures for both metals are also bullish, which continues to invite the shorter-term futures traders on board the long sides of those markets, wrote Jim Wyckoff. The metals are supported by a slumping US dollar index that hit a 2.5-month low overnight, he wrote. The US dollar was trading down 0.1% at $90.17. As measured by the ICE US dollar index DXY, 0.18%. It traded as low as 90.04, which is around the lowest for the index since last February. A weaker dollar can help to support buying in commodities priced in the currency for overseas investors. On Friday, gold booked the highest finish in almost 3 months after the U.S. Labor Department reported that the economy gained 266,000 jobs in April, far fewer than even the most subdued forecast for the month, raising some questions about the strength and pace of the recovery from COVID pandemic. Among the other metals traded on COMEX Monday, April copper HGN21 1.21% loss, 0.7% to settle at nearly $4.72 an ounce. May platinum PLN21 0.84% tacked on 0.9% to 1,265.50 an ounce, and June palladium PAM21 1.53% added 1.5% to $2,960.20 an ounce. May 11, Reuters, gold prices were subdued on Tuesday as rising U.S. Treasury yields countered support from a weaker dollar and investors awaited U.S. consumer price data to gauge inflation. Spot gold fell by as much as 1% to a session low of $1,816.90 per ounce before paring losses and was down 0.1% at $1,834.90 per ounce. Momentum has shifted back in favor of gold and silver for the time being, said Jim Wyckoff, senior market analyst. The last time we spoke, the markets, both gold and silver, were in a short-term downward trend in prices. Remember, we were talking about key levels of support that needed to be held to keep prices from accelerating downward. And those key price support levels, technical levels, actually held, said Wyckoff. Regarding silver, Wyckoff said the silver market simply followed the price of gold. Wyckoff added that this recovery should continue in the short term. The chart suggests that this will be the case short term. Right now, with the bullish breakouts we've seen on our daily charts, now the price action we've seen in silver, the path of least resistance is sideways to higher, he said. Gold futures dropped by more than 4% on Friday to log their biggest one-day loss since early November as yields for U.S. government bonds extended a weekly climb, eroding some appetite for bullion, which competes against haven sovereign debt for buyers. The bearish fundamental of very little risk aversion in the marketplace at present is working against the safe haven metals, said Jim Wyckoff, senior analyst at Kitco.com. In a market update Friday, benchmark U.S. stock indexes carved out fresh records Friday before pulling back. They are set to end the week higher. Meanwhile, Bitcoin, which hit a new record high, may be stealing some of the trader investor buying interest that would have been in the past directed to the safe haven metals, said Wyckoff. February gold GCG21 GCOO 36% fell by $78.20, losing 4.1% to settle at $1,835.40 an ounce. That was the lowest settlement for most active gold futures since December 14th, according to FactSet data. Silver for March delivery S1H21, S100, 0.15% meanwhile fell $2.62 or 9.6% to $24,637 an ounce. That was the largest single session percentage decline since September 21st of last year. Based on the December 31st settlement, which was the last trading day of last week, gold has lost nearly 3.2%, while silver saw a weekly slide of 6.7%. A weaker than expected December U.S. jobs report failed to provide much of lift for metals on the session, even though analysts expect more fiscal stimulus from the incoming Biden administration. It's surprising to see such a massive downside move for the gold price when the U.S. job numbers have clearly indicated that we are not out of the woods. Naeem Aslam, chief market analyst at AvaTrade, told MarketWatch. Higher treasury yields can spell weakness for gold, which, like other commodities, offers no yield and suffers more by comparison. The session's slump for gold prices followed political wins by Democratic candidates in 2 Senate runoff races in Georgia earlier in the week. That paved the way for further fiscal relief measures from President-elect Joe Biden after he takes office on January 20th. This may well just be a bit of a catch-up move, with yields having risen all week following the Democrats' victory in Georgia, which gave them control of the Senate and completing the clean sweep, wrote Craig Erlam, senior market analyst at Onda, in a daily research note. Gold has likely formed a short-term top this week, said Chintan Karnani, chief market analyst at Insignia Consultants. Market participants said that the lack of upside reaction from gold may also be due to expectations that the jobs report would be even weaker and a bullish economic outlook that could hurt gold prices in the near term. Today's big miss on the jobs consensus forecast did not significantly move markets. Reason: traders and investors are so keenly focused on the bullish aspects of the likely end of the raging pandemic this year and the ensuing expected booms in the world economies, wrote Jim Wyckoff, senior analyst. This is all for today. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.